Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. Today's date, June 11th. We're right back at it. We welcome you. We also got Connie Hill in the chat. We welcome her as well. Jay Richardson, hello to you. Dom, welcome to you. Eva, welcome. How's that southern heat? It's getting a little hotter here in Utah, that's for sure. Grace, hello. Helen, hello. Michelle, and many others. Welcome to all. Now, just real quick, we're talking about trading growth and value stocks. We'll talk about the overall markets in general to begin with. After we do that, we're going to talk about directly, I want to talk about exiting, okay? I want to talk about stop adjustments, okay? How do we visually see the exits? And I'm going to really talk about kind of two main ways to see those, and I want to talk about stop adjustments, okay? Now, why the topic? Well, if you've been watching the NASDAQ, we saw that the NASDAQ today and the semiconductors went up to the horizontal resistance. Some investors might use that as maybe an opportunity to try to sell some positions if they're up near the targets. So that's why the topic. And I think we could always get some practice with that. Now, with that, we'll also make sure that we cover some new examples as well. Now, remember, when we talk about examples, they are just that. And to also remember, you could find Connie and myself on X, and I'll show you that in just a moment. There's my handle. Connie, feel free to put your handle in there as well. And also remember, the information we discuss here today is done for general informational purposes only. Should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Now, I want to ask you a quick question. If I had, for some of you that have watched me for a little bit, what do you think my two favorite strategies are? Now, I'll give you a hint. I can't tell you. But I was thinking about this today. I was like, gosh, dang it. I have really two favorite strategies and only I know it. Okay, so just let me know if you just take a guess what you think my favorite strategies are, and then tell me what yours are. At least one. Now, also remember that Schwab does not recommend the use of technical analysis as a sole means of research. And so we'll talk about fundamentals. I also want to kind of bring back up correlation today, kind of with some of the movements we've been seeing in some of the prices. And also remember that investing involves risk, including loss of principal. So the goal here today that we want to really do is show application of entries and exits. We're going to start with exits first, okay? And then we're going to come around and look at some new examples. Now, let me kind of just pull up just real quick the market first. Now, by the way, if anyone that watches my sessions, feel free to use the same settings we do on the column headings there on the Market Watch quotes, okay? If you go to, for example, my X page, I share all those, okay, right at the very, my gosh, Greg, you're very, is that your favorite one, or are you saying that's mine, okay? Or speculating what mine is? Let me know. So if you say, well, where can I see those scripts? You're going to see that right at the very top, I put those right there, okay? Any of those scripts, they're in blue color right there, okay? Blue color, okay? So if you said, I want to see the trend daily, okay? And that's the script. You just you cannot copy and paste because it's not a Word doc, but you just write it down and you could just type it in. Or if you have a second screen, you could just, I'm looking at it on my right screen, I just type it in on my left screen, okay? Now, if you said I'm confused on which one is for the chart, anything in red, that's the script for the chart, okay? Now, also remember, when we talk about scripts, they're not guaranteed for accuracy or timing, and also should have an understanding of what they're really trying to show you. Now, that you could verify manually. Now, if we take a look at this, just take a quick peek. The Dow Jones sitting here about 34, 36 down, kind of more of a neutral day for the Dow, if you will. Russell down 5.82%. Again, not really down that much, really down 0.25%. NASDAQ down the most, 0.5%, not life-changing, okay? And you're going to see the SPX down 0.4%. So when I kind of say neutral, I'm thinking like up 0.5%, down 0.5%, somewhere in that range. Today, if we talk about the indexes, they are kind of more neutral. Now, why am I bringing up the topic? Okay, well, if we're talking about trading, right? If we're talking about trading, a lot of times we know that shorter term type of traders will use prior highs or resistance levels, and they'll try to sell into some strength, okay? Now, does that mean the whole portfolio? Of course not, okay? But there's going to be some stocks that might be technology-based that might be mimicking what the NASDAQ is doing. So first off, the investor might ask themselves, do they have any tech stocks where they maybe look like they could be also coming up to resistance? And an investor might say, I'm going to A, sell into the strength, 2, consider protection, whatever that might mean for you, or 3, adjusting the stops, or last, manually exiting, which is kind of like the first thing we said, okay? Now, so when we look at the NASDAQ, it's come all the way back up to where it fell down from. Pretty impressive, but maybe in the shorter term, maybe a little profit taking for some. Now, the SPX, if I go back to that chart, we're not up as far, but since that is about 24% technology, you're kind of seeing that little pull back a little bit. Is it causing a change in trend? Answer, no, not so far. And overall, we're kind of still sitting with the green moving averages still. The Dow Jones, if we take a look at this, that one was the one that kind of went up to an intraday high and also above that 428-ish level and kind of faded back. Did it change the color of the moving averages? No. The one that we've been watching over the last, let's say, couple days has really been the Russell 2000. And we got the CPI data this morning that actually went up to an intraday high. Normally, we see day 2 on the breakout. That's the red candle day. It didn't do that. It went past there, which is not typically completely normal, okay? And finally, you're seeing a red candle after the breakout day on June 6th. Now, we talked about yesterday, looking at kind of some of the prices, right? We saw, for example, overnight, crude oil, okay? We saw that was the commodity. We've talked about gold, we've talked about silver, we've talked about copper. Last night, well, actually, it was today, about 12:15 in the morning, platinum, okay? Platinum is also actually moving quite a bit higher. And you're going to notice that crude oil commodity has also pushed up pretty aggressively as well. Now, why do we bring that up? Well, when we talk about trading growth and value, we're asking ourselves, what has a correlation to that price? Now, the other thing is, if you take a look at, let's say, what's still happening in the US dollar, that is not the most bullish chart we've ever seen in our life unless you flip the chart around, okay? And this is kind of still getting into that apex of the descending triangle. Now, remember, if you kind of take a look at, if this does break down, okay, so you have a triangle pattern, right? It was downtrending before we got into the pattern. If this breaks actually down, we're thinking, well, the commodities are already high compared to what, okay? So remember is if that actually breaks down further, which the euro still looks pretty bullish, okay? If that actually breaks down the US dollar, some of those commodities might just be getting started or potentially go up further if that relationship, in this case, inverse relationship, holds, okay? Now, the one thing I want to kind of make sure before we talk about exits and stop adjustments, when you go to the Market Watch and you go to quotes, you can right-click on the column heading, and then you can customize some of these headings. One of them that you could do, go to customize, and I was doing this about an hour ago, and I admit, okay, I just kind of like to look at correlation, I like to look at correlation in a couple different views. I'm going to show you the most basic views, but also something you can customize. So when you right-click on the column heading, okay, go to show that one more time. Right-click on any of the columns, go to customize. Just going to type in correlation, and if you do that, you're going to see that it gives a little question mark, and it's going to show us what is it really trying to show. Now, if I click on add that, what that's now going to do is it's going to show correlation, and it's going to tell you, well, what length of time do you want, and what do you want it to? So if I actually clicked on this and I said, you know what, I want length the last 10 trading days, and I want the correlation with the security SPX. You don't have to put the SPX. You might put in you might put Dow Jones, you might put NASDAQ, you might put the energy sector and so on, and we're going to hit that in just a moment. So if I said, you know what, I want to kind of know what stocks might be moving up with the energy sector. So if crude oil is going up, what if I had a watch list of energy stocks, which we'll make one real quick to show this, what stocks are moving up in line with the IXE? Or if I wanted to actually look at, let's say, the crude oil price itself, which one is actually moving up with crude oil? Okay, so how long would it take to make a watch list? Answer, not very long. Let's show us how we can do that. So I'm going to click on OK. Now, no, don't want to do that. Okay, save as. Yeah, we'll do that. Okay, and I'm going to slide this over. So how do you make a watch list real quick? Well, let's quickly go to scan. Okay, and if I actually go to scan, all I'm going to do is I'm going to go to scan in and then just go to buy industry, energy, and I'm going to click on select all energy. Okay. Now remember, with this, we're only saying give me a stock above 40, give me something with the average, not the average trading volume, the current volume greater than 500,000. Always got to remember this. If you're in the first 10 minutes in the market, that might be pretty hard. If we're further in the market day, maybe like the middle of the day, pushing it up to 1 million is not a bad idea. When we actually take a look at this, there's 152 matches. So if we want to, we could actually just say, look, give me 1 million, okay? I still get 113 stocks. If I open this up a little bit and say, give me a stock greater than 80, how many stocks do we get? I got 14. So if you want a bigger list, smaller list, just push up the filters, okay? And now if I say, hey, let's go ahead and put this in a watch list, save it as a watch list, now it's game on, and I'm just gonna call this energy, okay? And I'm gonna call it A energy so I can see at the top of the list. Save, market watch. Go right back to the drop down. Personal, we know it's A energy. And you're going to see that if I take a look at that, A energy, where did you go? And I might have overlooked it. Now there it is, right there in the middle. Okay, right where I wasn't looking. Now, so here's the list. Now, the biggest thing is on your side, if mine loaded right and I'm on a paper money account, I can now see what stocks are being correlating to the crude oil price. Remember, if you actually go to that heading, anything that has -1, negative correlation, 1 positive correlation. If I want to go in and customize and say, you know what, James, I actually want to kind of see that correlation is maybe to the energy sector, could be a quick way to fix it. Okay. All right. Yeah. I like to use trading volume. Okay. Then average volume. But you also have to consider the time frame you're looking at. So if it's the first 5 minutes of the day, might be tougher to get higher trading volume. The other way you can kind of get around average volume is probably pick a higher price dollar stock. Okay, that'd be another way to do it. Usually can find the stocks that actually have more volume anyway. It's probably how they got up to that higher price. Now, what I'm going to do in this case, so let's kind of hold this for just a second. I do want to come back to this. I do want to come back to, now let's do this, okay? I'm going to go, and we're just doing this for timing's sake, okay? So when I look at, let's say, Chevron, and let me try to fix something. We're going to do one entry example, okay? And now you can kind of see why Amber says, whenever you have a gift for me, you can never just wait till Christmas. You always want to give the gift ahead of time. Guilty as charged. Okay. I always tell her Christmas is for children. Okay. I like to give those presents early and often. Now, what I'm going to do is I change the correlation. Okay. And if I take a look at this, if I said that this is the correlation to the IXE, the energy sector. And what you're going to notice is anything that's closer to a 1, okay, means it's more in line with what the energy sector is doing. Now, you sure hope that the energy sector is going up, okay? EOG is up there, quite sensitive. FANG is up there. Hess is up there. LEU, not familiar with that, but the Chevron is 0.88. Stocks, for example, like LNG, we're talking about natural gas here, not much of a correlation, or EXE, and so on. Now, if I take a look at this, what I'm going to do is let's go back to Chevron for just a moment. So if we're talking about trading growth and value, that correlation, as we've been talking about the last 2 weeks, very important. Find what is going up, and then ask yourself, what has a correlation to that price? As we talked about, if gold and silver are going up, what has a high correlation to the price? If we're talking about oil here, which we are, what energy stocks have a recent correlation? Now, by the way, could you do correlation over different periods of time? You better believe it, okay? And so, by the way, Does correlation also play into the relative strength? And the answer is yes. But you got to remember is when you look at correlation, we're just looking at the last 10 days to the IXE, okay, the energy sector. When you look at the relative strength, we're looking at different durations over time, seeing what the trend analysis is of that. It's taking a look at the stock and it's comparing it to the SPX, which you can also customize, okay? So there's some similarities, but they are different, okay? Now, James asked a question to James, but you might have been wondering the same thing. Now, what I'm going to do is I'm going to go back and type in CVX. Now today, it was just like an hour ago. And by the way, we normally meet at 4 p.m. Eastern. We're now at 3 p.m. Eastern. And so really an hour ago, we had Chevron. Now, by the way, that would be our time session going forward. This is not a one-off. We kind of had the middle of the day retest. And it was a red candle. It was one of the first ones I wanted to talk about. But then somebody bought just like an hour ago and went, pushed it right back up. Now, I know, if we went back an hour ago, yeah, it would have been nice. But now we're looking at it right here and we're kind of asking ourselves, are we too high? The way we kind of measure, are we like too high, is go to the closest moving average, let's say the 10-period moving average, kind of measure it and say, okay, measurement is 1.63%, right? To get an actual bounce, you got to get the stock to go back up, so you're buying it a little bit above the moving average, okay? The moving average we're trying to target as traders is the 10-period moving average. That's the common denominator for all the trades, okay? Now, what I'm going to do in this case is I'm going to right-click on this chart. We're going to go down to Buy Custom. Let's bring it up on the paid money account, and I'll show it to you here as well. Now, if I actually right-click on that chart, okay, right-click, Buy Custom, and I'm going to go with OCO bracket. Now, our classes are really stock-based, okay? That does not mean they can't be derivatives-based, but that's not what this class is. We're focusing on stocks, okay? Now, notice the stocks that we're picking do actually have trend. They also do have volume and so on. So some investor, as we talk about stocks, someone else might be thinking about a different strategy. That's fine. It's just we're going to be focusing on stocks. Now, what I'm going to try to do is kind of say, where might this try to go up to? As a trader, okay, the windows that the trader is typically looking for is probably 6, 8, 10% move up, if we're talking about bullish, from where the stock is now. Why? Well, because if you don't get 6, 8%, you're not even getting a 1-to-1 reward risk ratio. So if I actually went back and actually said, okay, from the current price, okay, to that, it's 3%. Is that really enough? Probably not. So the investor might say, I'm not going to go for 148 because, well, it's not enough, okay? I need a little bit more. The second line, which is the 152 threshold, that's 6%. If you actually took a 6% risk of the entry price, that is really more your 1-to-1 reward risk ratio. And if you said, well, 158 is my target, there's almost your 10%. Now, those intraday fluctuations, now remember, one of the first things I want to teach you is don't be scared of red candles, especially if the red candle is still above the support level. The red candle can just be the intraday fluctuation down to the support levels where people buy intraday and then push it back up, which we saw in actually Chevron. Now, what I'm going to do in this case is we're going to right-click on the chart, which we did. We went down to Buy Custom, and I went with OCO bracket. We're going to put a target right at 152.79, and I'm going to put the capital there. I'm going to try to. Now, this is really going to be, what, about 5,000, 4,000? If I did dollar amount, okay, 4,000, how many? About 30 shares, double check, 27, 28. We'll go 28 shares, 28 shares of stock. Got a target, day to GTC, and you got day, stop, day, no, GTC. Underneath, where's the support level? Now remember, when we're looking for a stop, we're looking for the support area over the last 1, 2, 3 weeks. What has been acting as support? Is it a moving average? Is it a horizontal line? Is it a diagonal line? What's been acting like support? Well, if I kind of draw this up, it looks like there was some horizontal. Yes. There was also another horizontal here. Yes. Has the moving average been acting like support? Bounced there. Bounced a little bit there. So you could say maybe in the last couple of days, but probably maybe the closest the investor might want to set a stop is setting that stop underneath, let's say, that 140.05. So I'm going to take 140.05 and I'm going to set 140.05 less 2%, 137.25. 137.25. Okay. Now what we're going to see in this case, got 28 shares of stock. Okay. Target price, stop underneath. Remember I kind of said that this is like a 1-to-1. Okay. In this case, and we've talked kind of talked about that reward risk ratio historically. And now what you're going to see is there's the target. The 152.79 really has to be the minimum target. Now remember, let's kind of play this through. What happens if all of a sudden, and I don't want this to happen, okay? All of a sudden, if there's maybe a hurricane in the Gulf, there was a hurricane down by, let's say, Jamaica, and it was Category 4 storm. We've seen this before. Now, I don't want anyone to get hurt, okay? I'm just playing something out, okay? But all of a sudden, crude oil kind of starts ticking to the upside. More investors concerned about having the supply of crude oil, and among other things, then all of a sudden the investor might say, James, I'm not going to put my target at 152. I'm going to try to raise my target. So sometimes as you're going to a potential target, you kind of need to think through, what's the market doing? What's the price of what I'm trying to trade doing? I think you got to be careful just thinking, oh, 152 is my target. That's it. I'm not going to think about it anymore. I think it is open for discussion. I think you kind of need to take a look at market conditions and also maybe a price condition. When I say price condition, I'm talking about something like crude oil, gold, silver, things like that, tracking what the prices are doing. And if those prices are going up, is that correlation still standing, still working out? Remember with stop orders, there's no guarantee. We set a stop, but that does not guarantee what the price is going to be filled at. Noted? Send the order. And now we actually have that order sitting right there. Okay, now Ya says, actually, there's a hurricane heading our ways in the Atlantic. I did not know that, okay? So thank you for letting me know. But, when we talked about crude oil yesterday, like sometimes you get to this, you're probably like getting into August, July, you kind of get into that season, okay? And so there's reasons why crude oil might be getting a little premium in the current month that we actually have now that we displayed before. We are not trading crude oil, the price itself. We're trading something that has a correlation recently to that price. And we know that correlations can change, okay? Now, I want to go back to just real quick. Let's kind of talk about some examples of some stocks that are currently in the portfolio. Now, I'm going to tell you right now, if we kind of said, how many of you have ever struggled with selling before, we would all raise both of our hands. Before I look at any chart, I want to just kind of, if someone were to ask you this question, like, what determines or what could be sell signals for you, the investor? Well, and I'm talking about I'm not talking about targets, okay? I'm talking about if the stock were going down, what's your methodology to say I'm gonna consider selling or I'm going to sell? Now, number one that we always talk about is the whole moving averages, okay? Whole moving averages. We call it the 1, 2, 3, okay? The 1 is the 10-day whole goes red. This is, we call that more an aggressive exit. Now, why am I writing this down? Because we need to have some groundwork covered. If you cannot write down what are your potential exits, when you go to the chart, well, yeah, it depends. Yeah, it depends. You're going to see in our answers it doesn't really depend. It's going to be one of two things, okay? Now, if we talked about the investor says, I want more confirmation, we'd want 1 and 2. okay? The 10-day moving average goes red, and then we get a crossover, or the 20-period moving average goes red. That's 1 and 2. And this is waiting for more confirmation, okay? Confirmation. And then obviously 3 is delayed, okay, confirmation. And you've seen us do that, and we're going to do that. So let me just kind of bring up this example of Cardinal Health. And we're going to ask ourselves, do we want a more aggressive exit? Do we want something that has more confirmation? Or do I want something that's a delayed exit? Now, why would someone want delayed? Well, they're probably trying to trade more of the trend. If we're talking about a trading class, we're probably focusing on number 1 and 2. Okay? Now let's take a look at what this is. Okay? We're going to pull up Cardinal Health. Where's Cardinal Health? Cardinal Health is right here. Okay? Whether we have a profit or loss, that doesn't even matter. Okay? It doesn't even matter. We know we're probably in a little bit of trouble. How do we know we're in a little bit of trouble? What is on this screen that's probably saying, and I ain't talking about this profit loss open. What's telling us on the screen we're probably a little underneath the water? Answer, that trend 5. Now, the reason why I color-coded that to purple is if I hit myself on my arm, I get like black and blue or purple. That is probably saying that the capital is probably getting a little black and blue or bruised, if you will. And so that's really kind of telling us we're probably underneath a little pressure. Now, the other thing that's probably telling us that it's not great is if you look at the whole moving average, it's also in the red, and the 20-period moving average, it's also in the red. Boo! Boo! This is not what the investor wants. This is where the investor says, no, I don't want this. That is not the recipe for trying to make a gain to the upside. So if we get trend 5, and that just means the price is falling down below the 10-day exponential moving average, but it's above the 30 simple. And if we see those whole moving averages red, we know we're under pressure. Okay? Now, I want to see if we can't execute trade exit number 1. If we said in this class, if we get step 2, we're going to sell. Now, here's the thing. Before we even look at the chart, the investor needs to sell out to what those sell signals are. If you don't sell out, the likelihood of you executing what's on the chart is it just nosedives as far as being disciplined. Now, I'm going to pull up the chart, and I'm not interested in someone's thoughts. We're executing the exits, okay? Now, I'm going to pull up CAH. Geez, with that, let's just go to it. Now, you're going to tell me, do we see on this chart step number 1? I'll just take a yes or a no. Do I have step number 1? For sure, right? The 10-period moving average, it is red right there. Now, we could even maybe argue, which some of us like to argue, and I like to argue too. James, we could even have maybe step number 2 at the same time because the 10 is below the 20. So you could technically say, James, on this day, which was on 6/5, that kind of looked like that could have been a sell signal. Fair, okay? Now, if we actually go to the very next day, what do we have now? Now, if we didn't include the moving average crossover, on this day on 6/6, this is the 10-period moving average. I'll label it red. And now we have the 20-period moving average red. Now, again, if you say, well, James, we could have gotten out the day earlier because that moving average was, the 10 was below the 20. I already said that could have been the first time to exit, okay? And if you said, I want to make sure the 20-period moving average goes red, that is when we actually see the confirmation again. Now, here's the deal. It's not buy-in mold, okay? It's buy and sell, entry exit, okay? Now, just because the investor gets out of the position, it doesn't mean they can't ever get back in. But they're just trying to get out when the odds of maybe gaining aren't great. So the investor is going to come into actually Cardinal Health, and if they were manually looking at the chart, they would actually say Cardinal Health is sold. Now, we're going to put an order in to see if it can sell. And what we actually see in this case is Cardinal Health, 153.02. Click on that. We'll make sure that, is there a stop there? There is. We'll cancel that. Okay, cancel. And now what we see in that order is we're going to come in and actually now just say, okay, what's the mid price? We're trying to get somewhere in between the bid and ask, 153.02, confirm send. This is a limit order. Why is the limit order important? Because we're saying as a seller, we want that price or higher. Just because we type that in doesn't mean that they're going to give it to us. We're going to have to find out. If it doesn't fill in the first 2-3 minutes, we'll go in and adjust the price. A lot of times it could just be by pennies. But that's an example that's showing a sell signal if the investor is actually saying, I want that secondary confirmation, okay, or step 2. Now, what I'm going to go back to, now here's the thing. Can you write down what your sell signals are? That's a question, okay? Before you ever look at the charts, can you write it down and intellectually understand what it's going to look like on the chart? And also, it wouldn't be a bad idea if on the monitor tab, you might have had some of those column headings too. Now, I want to go back to just real quick the IRA. I will also want to pull up just one other quick example. And what I want to do is I want to kind of show the example of, let's go to NEM, okay? Now, let's say the investor said, you know, James, I have shares of NEM, 100 shares. Let's pull it up, okay? Let's get a little practice here. It's not just about buying. We're going to do buying right after this example. But if I looked at NEM, I just kind of want to know, is this in trouble? Where do we stand? And so on. If I was looking at this column heading and I'm saying, James, I'm seeing a lot of orange color. Can anybody remind me why is it orange? Now, when you kind of think about things that in the time of the year that go orange, we think of the fall time. The season is changing. It's going from really hot weather to now it's cooling off, hence the orange. Now, if I look at, let's say, a stock example given, like NEM, okay, where are we at on that? Well, it's not 4, it's 5. So the price is slipping down below the 10-period moving average. Okay, now, if I took a look at this, okay, something I want to kind of expound upon is, if I go look at the mark price right now, 53.07, and I go look and see, well, what's the 8-day low? If I set a stop at the 8-day low, where is it? 52.08. So if we're talking about, are we stopped out yet? If I set a really tight stop, the answer is not yet, but we're like within $1 of being stopped out, okay? Or the stop to be triggered to be stopped out. Now, if I said, well, James, I set that stop at that 10-day low, okay? Well, it's 51.08. It's giving a little bit more room, about 28 cents, but both of them, I mean, we're close, okay? And I'm looking at what's the current price now to where are those lows on the chart. Now, when we start getting into trend 5, we know that price is pulling back. So without even looking at the chart, I know we're probably in that little flag condition. Pull back up the chart, go to charts, say, give me NEM, what does it look like? And lo and behold, boo, we actually see price down below the moving averages. Now, if we kind of say, well, James, I'm manually exiting. Now, by the way, could you do that and set stops? You sure you could. That's why we're going over it. Well, now if we take a look at this, if I said, okay, where's the first sign of warning? Answer, it was on June 5th. If we actually go to the very next day and said, no, we're waiting for that secondary confirmation, where we actually get the 10-period moving average to go red, it did. The secondary moving average to go red, it did. And what you're now going to notice is it was a crossover on the same day. So really, the 2 and 3 steps, those are really on the same day. So if we're talking about the investor says, I saw a sell at least on 2, maybe step 3, it was on June 6th. You need to type in the chat, do you understand that? Now, this is very important. You might say, well, geez, you're making like very remedial. Look, if your exits are complicated, it's going to be harder to execute, okay? Now, sometimes what investors do is they say, look, when I get a really big run to the upside, if I want to get out earlier, I want to try to grab any of those profits that are there, okay? Now, there are some investors, they say, James, if I can make 10, 15, 20%, my exit is going to be more aggressive because for me, the investor says, maybe that's like a home run trade for them. That's kind of up to them to decide for themselves what they've seen and how they want to play that, okay? And that's fair. That's a fair comment. And sometimes you just have trades that are big gains. Now, what you're now going to notice is that stock is really right there, and it's inside that red candle's body. But if we said, hey, when we look at this, there's been manual sell signals, okay? Step 1, 2, 3. Now, if I pull this up on the chart and I said, hey, show me where those lows are now on NEM so we could verify that. Well, if I pulled this up and said, what do we got? Where could the stop be? The white line represents the 8-day low. The red line represents the 10-day low. And what you're now going to notice is those lines are the same. So if we went back 1 day, 2 day, 3, 4, 5, 6, 7, 8, 9, 10 days, you're going to see that this 10-day low and the 8-day low is pretty much, they're right at the same level, and it's triggering off that candle right there, okay? That's why those lines are right there. So if this pulls back any more, so if you said, James, when I exit, I don't manually exit like you've talked about twice, I like to set stops. Well, that stop would be sitting right at, if I put my cursor on it, right at about 51.82, okay? Now, why do people set stops like this? Why do they not manually exit? Okay, so let me just speak to this real quick and then we're going to talk about a new example. Well, sometimes, and I'm just going to show this briefly, an investor might say, well, James, I don't want to manually exit on Costco because Costco might kind of be something that's a horizontal support, and I might manually be exiting right where I think support levels and where it could bounce. Now, you kind of need to look at that chart and say, is that really the case, or are we just kind of making a pardon for the exit? Okay, so but that's kind of the situation. If you said, well, I looked at the chart, but it does seem like we're at that support area, then that investor might give it a little bit more wiggle room to try to see if the stock can bounce, but it's probably not going to be a ton. So if I go back to NEM, I just want to show this, okay? If I pull this up and go to NEM, right click on that, and what I'm going to do is I'm going to put that stop right at 51.80, okay? Now I'm going to tell you right now, every day in the stock market, it's not about putting on new positions. It's about managing the ones that you got. If you don't manage the ones that you have, you can kind of like just give a lot of unrealized gains away. And the investor, as the market goes up higher and higher and higher, they become sloppy or undisciplined in managing their capital / positions. Who are you speaking to? Me, okay? That's what I would do. The market, the higher the market went, the more overconfident I became. And the points where you become the most overconfident, that's when you actually need to turn around and say, look, I need to be watching these trends. And where's the lows in relationship to the current prices? That's why we're talking about this to you now. Now, I'm going to go confirm and send. Now, if it says illegal, what that's really saying is we have an order here. I'm going to cancel that. And when I cancel whatever that order is, and I put this back on, then that stop should be allowed to be sent, and that stop is there. Remember, the stop is not saying it's getting out at right at 51.80. It's the trigger to sell. So step 1 of your homework assignment, we're not done, is writing down what are your 2 main exits. One exit we talk about is a manual methodology, 1, 2, 3. The second methodology we talk about is using the day's lows as a way to move up the stops, okay? In other words, you're trying to trade that trend a little bit more. So why does someone use kind of the first methodology versus the second? The first methodology, you're trying to trade the momentum, okay? That's what that methodology really is. Are you trying to trade the trend? Yes, but you're really trying to trade the momentum. The second methodology, where you're actually adjusting stops, you're really trying to trade the trend. Now, if you said, hey, what do you like? Well, in our examples, we probably show more examples of momentum entries and exits. So our examples would be more momentum, okay? Now, I'm going to go ahead and send that order. Now, what I want to do is I want to go back. Now, by the way, how many of you think that it's possible that you could say, James, I could incorporate this into my paper trading and I would feel pretty comfortable in seeing methodology number one, step 1, 2, 3. How many of you feel like you can do that? How many of you feel like if you said, you know, James, if you share with me that chart, if I had a stock like Microsoft, example given, which is in the paid money account, how many of you feel pretty confident that you could move up the stops based on where those lines are on the chart and execute that sample exit criteria? Do you feel confident? That's very important because I could show you stuff, but if you don't feel confident, then the likelihood of execution and discipline of it, low, okay? Now let me share this with you just real quick before we talk about a new example. Save grid as, let me share this with you, okay? Now you might be wondering what's on this grid. Well, you got to remember this is our basic chart that we always look at. The second chart is actually going to be the day's highs. That's why those lines are on the top. The very next chart, if I go for it, it actually includes the breakout lines plus the stop adjustment levels given a duration of time. And what you're now going to notice is if we look at the next chart, kind of has the shading there. And the last one, if we actually take a look at that, it just kind of, it has a MACD on it. So let me share with you just real quick that chart. So if we take a look at this, I'm going to go ahead and let me share with you this right here, okay? I just want to make sure everyone has that because it is a little handy chart. And I don't like to use one chart. I like to kind of use, it's like tools, right? I like to kind of have, let me just put that right there. Let me share that, share grid. Just want to make sure it shares the right link. There we go. Okay, there we go. Okay, there it is. Now, when you go up to the very tippy top, go to setup, open shared item. And when you do that, you can just copy and paste back in. So not too bad there, okay? So I want to make sure you have that. I don't like it when you just have one chart and you think that's the one chart for everything. I'm not sure if that's great. And so I like to look at different charts for different things. Am I looking at an entry? Just seeing trend analysis. I'm going to use the first chart. If I said I'm looking for a breakout setup, okay? Well, that's what the second chart's for. What am I going to use the third chart for? That third chart, I really want to kind of see if I were to historically have taken some entries, how long did these trends last? And if the investor would have used an 8, 10, or 20-day low, how volatile was it? Okay. And so that's why I like kind of some of those different charts. And I'm going to go ahead and preview that and just say import. When you do that, it's going to give you a small chart. And you could just save that right to your platform, all right? Okay, now let's go back and let's kind of take a look at some new ones. Speaking of looking at new ones, I want to kind of fast fire a couple stocks that are kind of maybe setting up a little bit. So obviously, we're going to keep an eye on the energy space, okay? And that's the one that's kind of been hooking. It's been down. It's been hooking to the upside. Another part of your homework assignment is you should be asking yourself is watching the crude oil itself, but also what stocks are currently correlated to the price of oil or the sector. We're also going to keep an eye on, for example, the financials. Couple Dow stocks here today. We saw Goldman Sachs here today get a little push and it squeezed itself intraday into this old channel. Why is that interesting? Well, we talked about that yesterday, but if we can get inside this old channel, the path of least resistance might be to the midpoint of the channel or to the top end of the channel. This chart, we actually look at it for trend and momentum, and we're also just kind of using the same methodology, the 1, 2, 3, but to the upside. But this first chart is also showing close above the high of the low day on that chart as well. So Goldman Sachs. Now, if we kind of said, hey, what stock in the Dow is there as well that might look like that? The answer is JP Morgan, which, by the way, remember JP Morgan talking about the U.S. is going into recession? Well, eventually the bear is right, okay? He's been wrong so far, okay? But overall, if you take a look at that, if we kind of said what stock might be on the brim of a potential breakout, and by the way, is a red candle after a green candle right at resistance, it is JPM. So the investor might say, James, I'm going to keep an eye on this. We start trading above today's high. That could be like, for some technicians, a classic hold setup. Now, I also kind of want to make mention a couple of healthcare stocks, which we don't normally mention healthcare. Amgen's kind of right at a reversal point. Going to keep an eye on that over the next day or two. One of the other healthcare stock that's getting a little push here, last one here, is also Abbott. The healthcare sector in general is trying to get a little reversal. Keep an eye on those two stocks. Could they push to the upside here? Now, the last stock I'll bring up, and I got to close, is Palantir. That one did poke a brand new high here today, but it shouldn't be a surprise. Now, out of my time here today, go back and re-listen to this. Can you define what your exits are? Can you write them down? And can you show examples of them? Okay. And can you practice the discipline of exiting positions? Now, remember, the investor's not trying to fall in love with the capital. The investor's trying to fall in love with the process in managing the positions and trying to grow the capital while managing risk. Now, remember, with what we discussed, it was done for educational purposes only. This has been the class on trading growth and value stocks. Thank you, Connie, and thanks to all of you. Stay tuned for our next webcast coming up right at the top of the hour. Thanks so much. Take care. Bye-bye.